Kia ora and welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name's Frances Cook. I'm the investments editor at BusinessDesk. Now today on Shared Lunch, we're joined by Scott Phillips from the Motley Fool. And in this episode, we talk about what's become known as dirty stocks, mining, fossil fuels, oil, and also what the switch to renewables is looking like. Now hold fire, before we get started, we've got some important information for you. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Welcome back and welcome, Scott. Thank you for joining us.
Thank you, Francis. Wonderful to be with you. Thank you for the invitation.
Oh, it's absolutely fab to have you here. Let's start at the very beginning, right? Dirty stocks. What actually are those?
Yeah, that is such a great question. Of course, we know there is no single answer to that one. It's in the eye of the beholder. They say beauty is in the eye of the beholder. Maybe dirt is in the eye of the beholder too. But we're generally talking about those companies doing things that we kind of find a bit icky. Now, depending on your particular view, it can be everything from the kind of the non-ethical, unethical, non-sustainable stuff. For the most part, in the Australian, on the ASX in particular, we're generally talking about mining stocks or mining-related activities. And again, I'm not going to make any value judgments here. Your viewers can make their own minds up as to what works best for them. But we are generally talking about things you kind of go, oh, gee, I wish we didn't have to do that. Or I wish they didn't have that sort of impact and didn't really cause that sort of drama. So that's what we're talking about when we say dirty stocks. It's that group of companies that we kind of all wish we could kind of click our fingers and the negative outcomes wouldn't happen, but they kind of do. And the question then for policymakers is, do we want them? And for investors is, should we buy their shares?
Well, exactly, because we've seen, obviously, the markets have been really up and down and all over the place the last couple of years. And at times there, the fossil fuel-based stocks have done really well. I mean, especially when the war in Ukraine started, there was a lot happening in that area. So what's your assessment of how these stocks have been performing? Let's just take the moral stuff out of it just for a moment.
Yeah, great. So let's look at oil is the easiest one to look at because, as you rightly pointed out, this was the one that was almost exactly inversely proportional to global stability, if you like. In other words, when the war in Ukraine broke out, the oil price went through the roof for a whole lot of reasons. We know there was shipping issues. We know Russia was threatening to withhold gas from Western and Eastern Europe. And we know that supply and demand is one of those basic fundamental economic concepts we all know and understand. The reality is with things like oil, because the world operates on a just-in-time basis, as soon as there is any sort of impact on supply at all, then some people have to start deciding whether they're going to pay more for that. And that really sends the price through the roof. So that one has been a really, really clear one. Now, it's come back down again. I haven't looked at it really recently, the last couple of days, but over the last 12 months, the oil price has come down dramatically, and oil company shares generally, oil and gas company shares have come down with it. So that's oil. Let's look at then at coal. Coal has been fascinating. We know coal is used for two things. One is for burning for electricity. The other is for use in steel making. So it's the same raw substance, or at least to the rest of us. To the industrial chemist, it's very different. But to the rest of us, coal is coal. But there are two very specific uses, two very different pricing mechanisms, and two very different market dynamics. Steelmaking coal, generally speaking, is reasonably stable in terms of that up and down demand and supply, although we know when China jumps on the steel bandwagon, they really need a lot of coal, and generally a lot of that comes from Australia. The energy creation, the coking coal, tends to then have a really, speaking of dirty, this is the one that's the arch enemy, right, of people who don't like this stuff, because we know, well, we like the energy it produces, we like the electricity, but it creates massive side effects in terms of global warming and air pollution. That market has been fascinating. So we've seen the coal price go through the roof recently. Interestingly enough, though, the coal company shares tend to be really low. Some of the big Australian coal miners are on single-digit price earnings ratios, which means they're very, very cheap if those level of earnings are sustainable. And so there's a lot going on, and we'll talk a bit about that, I'm sure, but a really significant set of movements. And of course, the other thing, by the way, is coming off the back of the COVID lockdowns and the COVID disruptions, we still really haven't, I don't think, got to what we would consider business as usual when it comes to global demand for these sort of things, because it made such a mess of the global economy and it really changed up supply chains. The last one I'll mention, of course, is then the future for coal. And this is why some of those price earnings ratios are so low, because the question really is this profit sustainable? And if you're burning coal and there is a new energy technology being produced or being proposed or maybe just might happen, then you got to start to think about, hang on, how sustainable is this level of profitability, not just because of the current price, but also because of the ongoing volume demands for these products if and when we see other energy sources overtake coal and potentially take business away from coal burning power stations in particular. And that is really what's on investors' minds.
Well, exactly. And let's add the morals back in so we've got the whole picture again, because it does end up impacting the money side of things, right? Because people often ask me about this. Can you invest ethically and make money? And obviously, I believe yes. But it can be this whole big question of how, of course. But one of the factors there is whether these industries become sunset industries, because these moral dilemmas means that governments may act, investors may act. How much does that impact the future of these stocks?
It has to, Francis. This is why this is important. And I'm going to go halfway between the moral and the purely economic, because I'm going to talk about the bit in between there. So my morals matter to me. But what happens with coal, for example, won't be set by me or my morals or by the pure financials. It'll be set somewhere in between by a combination of the community's morals and ethics, the choices that governments make for electoral and other reasons. And so when you talk about sunset industries, you could, for example, say, well, let me be very clear up front, right? I firmly believe entirely in the science of climate change, so I'm going to put my flag in the ground on that one. But if you're someone who says, you know what, this whole thing's a hoax, it's all about NASA and the lizard people, and they're doing all this thing, if that's your view, that's fine. It's probably wrong, but it's fine. But if you have that view, and yet governments make different decisions for scientific, for popular, for other reasons, it actually doesn't matter necessarily what my morals are. The future of the company will be determined by those policies, for example. So in Australia, it might be new coal mines being opened. They may or may not be approved because governments don't want to increase the amount of coal. There may be new taxes brought to bear on some of these things to try and reduce our usage. We know that there might be, and there are, subsidies for renewables, for example, to try and help that industry get up and running. And so the pure economics of this industry, of coal specifically, are almost second or even third order impacts, because you've got to get through the other stuff first of what's going to impact demand, what's going to impact supply, what's going to impact the profitability of that supply. Those are some really, really key ones. To your point, it seems reasonable to me that if the science is right, I think it is, that we can't burn all the coal on the ground. And a lot of companies own that coal. So we have a future which goes one of two ways. Either the coal gets extracted and burnt, or it doesn't. And to your point, if it doesn't, then it is a question of how many years do I have before this goes away? Again, rightly or wrongly, it's an economic question, a financial question for the investor is how much am I prepared to bet that governments will let this thing keep happening? If I'm right, they do it for a long time, I'll make a fortune. If I'm wrong and they cut it off soon, I may lose meaningful amounts of money, and more importantly, the opportunity cost of other businesses that do even better. So that's the combination. We've talked about the pure financial, the pure ethical, and then in between that is the actual policy decisions and the consumer decisions. If we all decide coal might be fine, but we don't want it, then again, the same thing may well happen.
What about, exactly as you say there, the investor behavior and how things change as a group? Right? You might have one or two people doing their own thing, but the group can be quite powerful, right? Are we seeing a movement away from mining, petrochemical stocks towards renewables and other sectors?
So we are. I'm going to again go two sides of the street on this one, Francis. I'm going to give a quick example of a US business called Altria. It was called Philip Morris. This is the cigarette maker. It was the single best performing stock in the US over, I think it was the 50 years to about 2000, something like that. Don't quote me on the time frame. It was the best performing stock despite the fact that it was the most hated stock on the US exchange, and the price and the PE were always low. And so part of the challenge for consumers, part of the challenge for investors, is not just thinking about what consumers will do, but what price you're paying for the assets you're buying. So Altria managed to, by the way, keep cigarettes flowing. And again, we can talk about the ethics otherwise of smoking. But the reality was that for investors, the financial reality was the shares were always priced so lowly, there was almost not much downside. And so what ended up happening is the returns from a really low, consistently low price when it came to dividends, particularly reinvested dividends, ended up really turbocharging this company's results. So let's take it back to the dirty stocks now in the 2020s. So to your point about the dynamic, a lot of investors have walked away from these companies. They say, I don't want to own oil, I don't want to own coal. Some are walking away from things like iron ore, and others are saying, you know what, I don't want anything to do with extractive industries, or I will do something different, whether it's actively pro renewables or just simply avoiding the negative stuff. We talk about positive and negative screening. So you might screen out the bad stuff, you might actively go for the good stuff. That is going to depress those companies' share prices. Absolutely true, compared to if they'd done nothing at all. The thing is, once those prices come down, then they're already low. So the returns from there are then a very different question, because there is a price for every asset, even sunset assets. There is a price you would pay for the value that you're going to get from that asset for the rest of its life. So we are seeing prices fall a little bit. That doesn't necessarily mean the returns from here will be bad, because the price has already come down. If that adjustment's already been made, then it's effectively what we say priced in. And so the future returns can be different to the past, even if it's true they never get back to their former glory. As, I mean, let's be honest, some of these oil and coal stocks were absolute stars of the kind of financial world for a while, because they were the license to print money. They may never get back to that. They may always be shunned in polite company. It doesn't necessarily mean you can't make money buying those shares.
So if we're seeing people start to move in whichever way they're choosing to move, but we're seeing movement, how big is that? Because there's movement where you can sort of, just generally see something's happening here. And then there's times when you look at it and you go, wow, that's a sea change. Where are we at on that scale?
Oh, that is such a great question. I'm gonna honestly say I don't know is the first part of the answer. Right now, a lot of people are forced to make up things, make up answers. I'm lucky enough to work for a company where I get to say I don't know, and that's okay. So I don't know where we are, and I'll say that for a few reasons. I think we know the trends that are happening in society, right? We know the uptake of renewable energy is phenomenal. The number of solar panels on Australian houses is through the roof. I think on a per capita basis, we lead the world, and we probably should, given the amount of sun and everything we have in Australia. So there's that going on right now. It's absolutely happening, has been happening for ages. People are choosing to opt out of, opt into green power, for example, or opt into renewables, or look for energy sources or companies that meet their personal ethics. That is absolutely happening as consumers. So that's definitely on track. On the other hand, we started talking about all the disruption we've seen in the economy over the past 2 or 3 years. And so trying to put a single cause or effect on this and say, company X's shares are up or down by this because of that, is really, really difficult. In fact, I think it's impossible. So hence me saying, I don't know, we can't know for sure. What I think we should, as investors, be aware of is the world that we're investing in. And so we've talked about the consumer choices. We've talked about the political choices that are being made currently. We've talked about the way, the different cost curves of some of these energy sources, the ability to create solar power for zero marginal cost after installation, for example, compared to coal-fired power. So those trends are already happening. And I think it would be folly for any investor to say, let's not worry about it. It's probably going to be fine. I'm a big believer in the old normal, right? I've been around long enough that when people say, oh, it's a new normal, I'm like, nah, it might be for a while. That'll change. And yet there are some really significant changes, genuine changes. The internet, for example, right? That wasn't just a fad. It revolutionized almost everything. Didn't mean, by the way, every investment in the internet worked, and I'll get back to that because we'll talk about renewables in a minute. But what it did mean was there are some significant, sizable and seismic changes to the economy, to society. And as investors, we need to be aware of that. So I think we are through the looking glass. We are absolutely on the other side of this one. We are in a new world. It's still happening. It will roll out for a time to come. New Zealand leading the world in adoption of renewable technologies and renewable energy sources. Australia hopefully not far behind for the sake of the planet and the equality. But as investors, we also need to take a very cold-eyed view of that and say, and this is what's going to happen or may happen financially. The other thing I will say, Francis, when I say I don't know, the investor's job is not to be right or wrong. The investor's job is to take probabilistic investments, right? To assess the probabilities of outcomes and the size of those outcomes. So X% chance of it happening, and if it does, this is the size of the change, and then make your investments accordingly. I'll kind of cut to the chase a little bit. I've looked at Australian coal companies before and said, you know what? It's a bit dirty. I don't really love it, but gee, it looks cheap. Maybe I could make some money doing it. And I haven't pulled the trigger because I'm not convinced these companies have a strategy yet to deal with the government plans, the changing legislation. And so it's not even a case of if this happened, that would happen. It's I can't see the future well enough. I can't assess well enough the probabilities of those outcomes. And it's completely okay as an investor to say, I don't know, I'm out.
yeah, can I just say a moment there of appreciation for saying, I don't know. I really wish more people would be that honest. I absolutely love it. When we look at this, obviously one of the big changes that can, some of these heavy hitters, right? The institutional investors, your hedge funds, super funds in Australia, KiwiSaver funds in New Zealand, even though our KiwiSaver is obviously a lot smaller than your super system, but still big hitters for us. When we are looking at some of those big investors, are they showing a trend and are they impacting this at all?
Yeah, so this is fascinating, mate. And this is, again, I'm going to probably keep going back to this idea of the ethical line and then there's the purely kind of selfishly financial one and where they overlap. And so we're seeing big investors like BlackRock. It's the world's largest fund manager. And BlackRock has basically said, look, we believe in the climate change is real. We also are really worried that the investments we're making are in companies, as I just talked about from Australian coal companies, our investments are in companies that we don't know if they've got a solid plan for a post-carbon world. And so on that basis, there's fundamental investment risk, nothing around morals or ethics or preferences or, Pollyanna blue sky stuff. This is just purely, hey, I'm assessing this company and saying, guys, we think this is going to happen. We think governments are going to make these changes. Consumers are going to force these changes. Rightly or wrongly, that's probably going to happen. Where's your contingency plan? And a lot of those companies are saying, well, we kind of don't have one because we're a coal company. What else do we do? And by the way, that's a very valid question because companies that try and pivot very often don't make it. So I'm not even sure they should try and pivot necessarily as a controversial statement. Can a coal company become all of a sudden a renewable energy powerhouse? Maybe. Or maybe they should just realize that they're going to be a sunset industry, harvest the cash for investors, and then say, that's it, we'll turn off the lights. Thanks very much, guys. So that's a really open question. But back to your point about the big institutional funds, we're absolutely seeing massive movements away from that area for two reasons. One, the funds themselves saying there's investment risk here. And also, speaking of honesty, let's be honest, funds set themselves up because they think they can attract cash, right? If you're a fund manager, you want to be right. But you also want to be right in a way that attracts a whole lot of investors to say, I'll give you my money and you can manage it and take a clip of the ticket. So those guys are looking around saying, you know what, there is a massive, massive public appetite for ethical investing, for negative or positive screening of these companies. We want to get out of these spaces. Now, I will say very quickly, another controversial statement you may or may not want to come back to. I'm far from convinced that so-called ethical investing actually matters to the outcomes for society. I wish it wasn't true. So I've said I'm a card-carrying member of the Climate Change Science is Real Club, so I wish it was true. As consumers, we have massive choices and opportunities to change things for the better, and we should use our money accordingly. As investors, I'm far from convinced, and again, this is a bit of a tangent, so I apologize. I'm far from convinced it matters because let's say I sell shares in the coal company. We can mention names or not, but let's say I sell my shares to you, Francis. You buy them, I sell them. I feel better because I'm no longer in any dirty industries. I feel ethically clean. The problem is the same number of shares still exist. Someone else owns them. It doesn't impact the company at all because when you and I buy and sell shares on the ASX or the NZSE, you're swapping them backwards and forwards, but the company doesn't know or care, and they're not going to change their behavior based on who specifically owns or doesn't own those shares. So the actions of the ethical investor, unfortunately, for all of us, including the world, are much, much, much less impactful than I think most people believe. Most importantly, maybe want to believe, because we kind of want to think we can make a difference, right? There's a small chance in some conditions, in some circumstances where we're making a difference. Largely, I think the whole thing is overblown, but let me go back to your question. That's not stopping anybody. So let's be clear. In fact, I'll give you a very quick example. I own shares in an Australian listed company called Australian Ethical Investments. So I like to disclose these things, which means I should be here saying, if I was being self-interested, yeah, everyone should invest ethically. This is a great idea. I own those shares because I think people are going to do it. I also, at the same time, don't actually believe it makes a difference. So that's a massive dichotomy, right? What does it come down to? The fact I don't think people are going to listen to me enough to change their behavior, because if they did, I'm out there saying, you know what, maybe don't do this, guys. On the same case, I own shares in a company that benefits from people doing it, because I think the urge to want to do something is so strong, and it goes back to the point you're asking about the changes in society. It's evidence of people who are saying, even if it doesn't matter, it can't help, so maybe I should just do it anyway. That is the public mood right there, I think, in a single picture.
That is so interesting. Okay, I would love to dive into that a little more.
Go on.
We could spend 3 hours on this topic, so I'll have to be really careful. But it's such an interesting point that you raise, right? So 2 things that I would like to follow up on there. So there is the idea that if you're an ethical investor and you sell out of it and it becomes less popular for ethical reasons, enough people do it, the share price goes down, the company feels under pressure to perform for shareholders. So do you feel like that doesn't happen in enough numbers, or is it that it doesn't really impact the company enough? And also the idea of the impact or activist investing, where people buy into a company in order to go to those shareholder meetings and say, do better. So those 2 approaches, do you think there's anything in them?
Yes, but I don't think the impact is what we think it is. I'm going to use the example of BHP. So BHP, the Great Australian kind of miner and previously driller, BHP had a big oil operation. And people got to BHP meetings and embarrassed the company in public. They go and protest and they get covered on the news. So-and-so protester at the front of BHP saying, you're killing the whales, stop doing it. By the way, I'm not making light of any of this. I'm being a little bit flippant on the way through. But they're saying, you're causing a problem, BHP. You are bad guys. Don't you care? You should stop doing this. The thing is, BHP said, okay, we agree. There was no victory, though, because what they did is they said, you know what, BHP as a company, we don't want to do this anymore. We don't like the bad press. We're going to sell. In fact, they demerged it. Complicated, don't worry about it. They effectively got rid of their oil and gas assets and gave them to somebody else. And so there was no less gas or oil being drilled. BHP is now a clean, ethical company, or at least, depends what you think about their iron ore, but in any case, they're out of petroleum, right? So all of a sudden, they seemed like an ethical investment opportunity, except it didn't change anything because the number of wells being drilled, the number of barrels of oil and gas equivalent being produced didn't change. In fact, they went to Woodside, which is an Australian oil and gas producer. And so, again, in terms of what changes, did it make some change? Superficially, sure. But did it change the amount of produce being created? No, not a single barrel less because of this change. So you're right, if investors all sell out en masse, the price falls. Now, here's the other thing, though, by the way. If your price falls from 10 to 6, let's pick some numbers, and then the market says, you're under pressure to get your price back up, you get it back up to 7, you look like a genius. So you kind of, on one level, the low expectations problem. I mentioned Altria before, Philip Morris, the cigarette maker. They had a low PE for exactly this reason for ages. No one liked the shares. No one wanted to buy them. Not many people wanted to buy them. But those who did and held them made out like bandits. So what happens? Here's the other problem with activist investing or selling off, is I sell my shares, or let's make me the bad guy. You sell your shares to me. I say, I don't care. I'm happy to own, Earth Destroying Corporation Limited. And so I do that. But once I own them, if I don't care, I'm not going to sell them to anybody else. The price is low, so I'm probably not going to sell them. I get good returns because my dividends are high as a dividend yield because the price is so low, and I make a fortune. So what have you done? You've made yourself feel better. I bought the shares cheaply. Then I've profited handsomely, and because I don't care about what happens, I'm the worst person to own these shares in the world, right? If you own them, you're going to say to Earth Destroying Company, guys, can you be a bit nicer, please? You sell them to me. I'm a mercantile narcissist, who doesn't care about anything except myself, and I say, I don't care. Yeah, go on, guys, keep destroying the Great Barrier Reef, keep pumping oil into the sea. I don't care. I'm going to make a fortune here. And so in that case, again, the operations don't change. In theory, possibly the shareholder base gets worse rather than better because the only people left are the people who don't care. So we just need to be a little bit careful about, I know it's a bit like the X-Files, right? People want to believe, they want to so desperately believe they can make a difference. And I don't blame anybody for wanting to believe that. I don't blame anybody either way for selling their shares either. If you don't want to own coal shares, don't own them. I'm not saying you should own them. I'm just saying be careful when you think you're improving the world by being an ethical investor. An ethical consumer, you have 1,000 times the power. Ethical investors, less so. So just, again, own whatever you want, buy whatever you want, hold whatever you're comfortable holding for sure. Just don't get too carried away with the noise. This is where the Australian regulator ASIC has this thing about greenwashing, right? Companies saying we're doing this to help. They absolutely want their share price up, as you say. ASIC saying, guys, you've got to be able to kind of substantiate the change you think you're making. I would say the same is probably true for investors as well.
Yes, and let's get more into that because ASIC, for those who haven't come across it before, Australian Securities and Investments Commission, they have been quite feisty lately, if I can just slightly glibly there, but
No,
they
have.
have. They even took Vanguard, taking them to court, accusing them of greenwashing,
Yes.
which I thought was very interesting because Vanguard, of course, does have a good reputation. So in this clampdown on greenwashing, are there any notable offenders or trends that people should keep an eye out for?
I'm not going to get in trouble by naming anyone, Francis. Nice try. But I don't want to get sued by anybody. No, I'm kidding. Look, I'm a massive Vanguard fan, but I'm also equally stoked that ASIC is showing no fear or favour and going after the people who are doing the wrong thing. And by the way, it's kind of one of those things. You get a couple of big scalps, little guys are going to pay a lot more attention because they don't want to be caught up with the same problem. So I love that ASIC are doing this. I think it's really important. Again, this is why it's important, right? Because this is not actually, in this instance, it's not really about being green or not. It's about being honest and transparent about what you're offering to an investor, and then they'll be able to make a decision based on their own assessment of the facts, right? So you just simply can't misrepresent things. And the allegations, I'll throw that word in a few times, kept myself out of the lawyers' offices. The allegations are some of these companies are misrepresenting their products. Now, it could be in any one of a dozen different ways. In this case, it happens to be a new focus on greenwashing, and it's specifically because of what I said before. There are so many people who are saying, I wish I could find a better way to invest. I would feel better if I invested ethically or sustainably or whatever phrase or term you want to use. So they're looking for that stuff. And again, as I said before, if you're a fund manager, you're going to say, well, if I just polish this a little bit and kind of hold it up to the sun at a certain angle, it might look like it's green. You might want to buy it. That's kind of what's happening. So it's really important that they're doing this. The things to watch out for are stated claims of outcomes. Well, there was one, again, I won't name them actually this time because I can't remember who they were, but it was awful. Basically said, there is this much less CO2 in the atmosphere because our members sold these shares. And it's exactly what I said to you before. And when the shares get sold, they don't cease to exist. The company doesn't lose money, right? They just change hands. And so this idea that somehow these fund investors had created or had contributed to less carbon in the atmosphere was just absolutely untrue. It was just entirely untrue. And yet they'd made this claim because assume they either were completely ignorant, which is possible, or try to prey on the ignorance of investors by saying, gee, you could have this impact too. We're all trying to reduce our carbon footprint. You could reduce yours by doing this thing. Now, on one level, it's kind of completely true. If I don't own the shares anymore, then I'm not responsible. But selling them to somebody else doesn't make the problem go away. There's a famous, I don't know if you know this one, you might not be old enough, Francis, Clark and Dorr. So obviously, John Clark, famous Kiwi. Fred Dagg, those who know Fred Dagg, did a two-way spot with Brian Dorr in Australia. And if you just Google The Front Fell Off. It's a fantastic clip. They're funny guys. They talk about the fact that this minister responsible for the environment was saying, no, there was no damage in the environment because the ship was towed outside the environment. That somehow it wasn't inside our realm of responsibility, therefore it wasn't a problem anymore. And they make a big song and dance about that. The analogy here, other than just that it's very funny, is selling it to somebody else. If that clears your conscience, yeah, I'm not sure it necessarily resolves the problem for the world. It certainly doesn't make the world's problems any easier. It might just make you sleep a little bit easier at night.
Yeah. Oh, that is so true. And we're having a lot of fun playing in the grey today. I am very much enjoying that part of things.
That's good.
It's great. The renewables debate. There's a really grey part of it that I would love your thoughts on, considering you're giving such great hot takes. Lithium.
Yeah.
Fuels a lot of the renewable sector. Itself is not renewable. Where do we put it in the dirty stock debate?
I love that, mate. And I'm not necessarily an anti-lithium, anti-batteries guy, but if I talk to people who say, hey, you know what, there's a whole lot of people convincing themselves that renewables are better because somehow there's no problems. It's a bit like I just talked about towing outside the environment. That idea of, well, the lithium mining is being done in Africa, and there are, some of the miners are being treated atrociously, but it's over there, and at least when we get it, we're using it well. And I think you're right. That's absolutely an ethical question for us to ask. And this, again, as consumers as well as investors, is, hey, if you want to buy a lithium-ion powered device, whether it's a car or a home battery or something else, are you genuinely improving things, or are you just moving the problem somewhere else? And I don't have a strong answer for that. And there are people going to be yelling at the screen right now saying, of course, and no way, and somewhere in between. It's a really emotive debate. But that's a really good question. So is lithium green? I guess I don't know the answer to that. What I will say is that and this kind of gets ethical in a hurry, but it's also kind of policy related. So I'll talk to it a little bit. It's not very financial actually, so I'll talk to it quickly and we'll move on. There's a hierarchy, I think, that's reasonable to have when it comes to environmental damage, which is simply, what is the bigger issue? And, there's a great quote, I can't remember who said it, so I can't attribute this one. There are no solutions, only trade-offs. And I think they're a really, really nice thing to think about. So I'm not so sure that a polluting lithium mine is worse than what might be catastrophic runaway climate change. Now, is either of them great? No, absolutely not. Is one better than the other? Yeah, I think kind of objectively that's true. Even if it's uncomfortable and a bit icky and a bit kind of hard to kind of say, well, I know I'm damaging that, but let's do less damage over here. That's kind of how you started asking the questions, which is a great way to kind of come back to it, which is that idea of what, where do I draw that line for myself? So look, I don't know enough of the science. I certainly don't know enough of the mining. It is considered a green element right now. I think probably greener might be the better way to describe these kinds of things, where they're better than the incumbent but not good enough. We've got some really big societal questions to ask. For example, this go on, I mean, I'm not going to go in this path, but total consumption, for example, energy consumption overall, the better solution might be to reduce that somehow. Now, how? I don't know. Plenty of people will be yelling nuclear right now. That's an open question as well, with its own side effects. And again, in the hierarchy of least worst outcomes, is nuclear better or worse than lithium? I don't know the answer. While we're on lithium though, Frantz, I will say a couple of quick things. The first is, I want your viewers to be really careful about what you assume lithium can do for a couple of reasons. Firstly, I don't know if this is the final battery technology or not. So if you're getting excited about the renewable revolution, that's awesome. If lithium ion is the battery technology of the future in 2085, then you're on the right horse. It wouldn't be the first time that someone has jumped on the newest technology only to be overrun by the next one. Again, some of your older viewers remember MySpace, which was the social network before Facebook absolutely ran over it. Was social networking the future? Yes. Was it going to be a lot of money made? Yes. Was MySpace biggest and best in the industry at that point? Yes. And then it got absolutely run over. So just be a little bit careful about what you assume the end point is. The second one is more demand doesn't necessarily mean higher prices, because there can be what they call a supply response. As the price goes up, what happens? More miners are incentivized to mine more lithium, more supply comes on stream, that depresses the price. So just because, if it's true that lithium is the future for renewables and for powering batteries, that might absolutely be true. If a lot of it can be found and mined commercially successfully at lowish costs, you may never see the lithium price increase again. In fact, after inflation during the 20th century, there's some rough back of the envelope numbers a few years ago, the oil price increased something like 2.5-fold over the 20th century after inflation. So in real terms, 2.5-fold, which is not bad, but the amount of oil being produced went from zero in 1900 to, I don't know how many, millions of barrels a day in the year 2000 or 1999. And yet the price only increased 2.5 times. Why? Because of that supply response. So don't just you've got to look at both sides of this one. Don't just look at demand and go, demand's going to skyrocket, therefore I'm going to make a fortune. You might. I'm not saying you won't. What I am saying is make sure you at least allow for a supply response that might bring the price down, might stabilize the price, may have no impact on price, could be anything. Just make sure you've at least considered that part of the equation.
While we're talking renewables, and I think this will hopefully be a nice positive note to leave on for people.
Let's try.
We'll see.
Yeah.
But the renewable sector, as you say, is getting a lot of interest. There's so many breakthroughs coming through all the time, which I find fascinating. So are there particular parts of the renewable sector, the industry, that is proving interesting to investors and possibly profitable, we all hope?
So you build me up, and now I have to kind of bring everyone back down again. I wish that was true. So let's break that down. The breakthroughs are spectacularly great. And we are seeing so many cool things happening right now in terms of renewable energy. Just the scale benefits alone, right? We're getting to that point now where solar panels, home batteries, those things become reasonable. And then grid scale batteries, large scale renewable, whether it's solar farms, wind farms, all that kind of stuff is happening at great numbers. And that's a really, really good positive thing to be happening. So that's really good. The challenge right now is we're in a bit of a phase where old projects were more expensive than the new ones. And so we're actually getting a lot of write-downs by companies saying, well, I did that project over there, and at that point it was big and exciting and new. Now the new technology's overtaken it. It's kind of made that, if not redundant, at least I've had to write down the value of it because it's not as exciting as it once was. So you kind of get this weird situation where new projects are great, old projects are actually being written down and costing the companies money, at least in P&L terms, because of that write-down. And we're not yet seeing, I don't think, really clear, obvious renewable investment opportunities in Australia at scale and at significant size that takes them out of the realm of speculation. So there are companies out there doing stuff, same in New Zealand, I'm sure, same in the US, but no one really at scale and at a level of profitability where you'd say, this is a good capital I investment, not a speculation, not a gamble, but a genuine investment. Where I think some of the, by the way, most exciting things are some of the big companies that are making the transition. So we talked a lot about shareholder pressure and companies changing what they're doing. AGL, the Australian Gas Light Company was originally called, one of the oldest companies in Australia, is moving really quickly now towards renewables. It's shut down a couple of coal-fired power stations. It's really investing heavily in grid batteries, in solar, in wind as well. So I think they're the ones that are probably worth keeping your eye on. Be careful not to chase good ideas with your money, right? If you're trying to earn a return, there are great ways to make ethical investments that are going to give you a good return. You said at the top of the program, that's what you think that's true. I think it's true too. Doesn't mean every pro-social, ethical, whatever you want to call it, investment is going to bear fruit as an investment just yet. So know what you're trying to do, but just be a little bit careful not to rush in too quickly. Some of those ideas that aren't yet proven out, that aren't profitable enough, that don't necessarily have a set up future to give you, again, as an investor first, what am I looking for? I'm looking for profitable, growing, stable, good management, good prospects, all that kind of stuff. I don't think you necessarily tick any of those boxes with individual standalone renewable businesses just yet, but some are coming to fruition, so keep a really good eye on those. And some of the established companies that are changing quickly, they will actually might well be the renewable investments, I think, over the next couple of decades. Not just yet, unless you want to maybe be on that journey, and that can be exciting and worthwhile in itself. If you can own something where you go from coal to wind over, a decade, that can feel good in itself. But if you're waiting for the renewable only investments to be made, you're probably a little bit early, I think, on the ASX. They will come. They will absolutely come, so keep your eyes peeled. But don't rush in. Don't put hope above common sense.
Well, on that, are there any particular stocks or even funds, maybe ETFs, but anything that you think is a good one to watch?
Yeah, I think AGL is probably my number one. I've already mentioned that, but I will mention it again. I think that's the one I'm most keen on watching. That's the business I think has the most potential. Despite my concerns about lithium, I think it is worth having a look at some of those players and just keeping an eye on what they're doing and how they're doing it. There will be a time probably to buy shares in those guys, so that technology is kind of cool. I think some of the infrastructure, I think what we will see in the next couple of years is infrastructure funds start up. So businesses that own, we've got property trusts right now. There are businesses out there that own data centers, for example. I think what we'll start to see is larger and more renewable infrastructure assets, whether it be wind farms or solar farms or some combination of those. That's what I'm watching really closely, because for income-seeking investors in particular who want to do that without necessarily being in other types of assets, that's going to be a really fascinating one, because there's going to be lots and lots of fixed cost investment, and those are going to be probably spun off into those separate trusts, the property trust and that kind of stuff. So keep an eye on that one as well. Other than that, as I said, I'm probably going to disappoint you a little bit and say, not just yet, just cool your jets a little bit. I think you don't want to get caught up in too much hope and not enough substance. We're not quite there yet, but those are ones to have a watch, keep an eye on. I will give you one quick warning about ETFs, actually, Francis, if I may, as we finish, which is don't get a bit like companies themselves. Don't get too caught up in the concept and forget about the fundamentals. We saw it with crypto. We saw it with a whole lot of other stuff. A green ETF will sound like a great idea because, hey, it's a whole ETF and everything else. As an investor, you still owe it to yourself to do the due diligence on the component parts of that ETF. Just because it's green doesn't mean you're going to have great financial returns, the same as any other ETF. So always do the work. Understand the ETF, its components, the price and the valuation, the future of those companies. And then buy the ETF by all means, once you've done that for diversification, but just don't kind of go, green is good, green is the future, therefore I should buy the green ETF. That's likely to expose you to more risk than I think many people think they're taking on.
Absolutely. And if you make that choice knowing full well what you're getting into, awesome.
100%.
That's your choice as an investor.
Yeah.
But just make sure it's an educated choice that you're making and that you know what you're getting into, right? You do still have to look under the hood.
That is perfectly summed up. You did it better than I did. Thank you.
I've got you, mate.
Well done.
I've got to say, just, as you have declared bias throughout this episode, I will also declare myself. I am one of those that absolutely believes if you don't have a seat at the table, you might be what ends up on the menu. It's
Nice.
a lot better idea to be part of that conversation. And if you want things to change, make your voice heard. I do think that's possibly the more powerful way to do things. Hey, thank you so much. That's Scott Phillips from the Motley Fool. Thank you very much for joining us today.
Absolute pleasure. Thanks for the chat.
And thank you so much to everyone who's tuned in today. Now, before you go, we do have a special offer for Sharesies investors from BusinessDesk. If you use the promo code, there we go, I'll say it properly, Shared Lunch 2023, all one word, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST, so it's a bargain. The offer does only apply to new BusinessDesk subscribers, can only be used once per subscriber, can't be used with any other discounts. Enjoy the rest of your week.